Hey folks, Dan Frio here, the rate update. Today is December 6th, 2021. We're going to find out over the weekend. The Fed came in and said, we're going to start tapering. We're going to do this. We're going to do that. How's all that affecting the market this morning and this week? That's what we're going to go over next, so don't go away. Okay, about 6-8 months ago, the Fed came out and said, we probably won't raise rates or do anything until 2023. And I said, guys, there's no way. Because they announced this, they don't know what's going to happen next year and the following year. I mean, they were talking 2023 back in 2020. And I was like, there's no way this is going to happen. Well, what happened over the weekend was interesting. Steve Leisman, take it away.
And Steve, so much of what I read over the weekend was this 180 that people think the Fed has done at this point and trying to get their heads around that.
Yeah, now that they've done the 180, Becky, they're not going to be traveling in that direction. A major shift, as you say, is underway at the Fed that amounts to the beginning of the end of this massive pandemic easing policies. The Fed not only likely to speed up the taper of the December meeting, but could begin discussions at this meeting and in subsequent ones about a series of steps to remove accommodation, perhaps earlier than the market has priced in. Among the issues that will be or could be on the table soon, obviously the faster taper, and then how soon to hike, how fast to hike, and even eventually the thorny question of balance sheet normalization that would be potentially reducing the size of the balance sheet. The pivot comes as concern about inflation has now taken center stage among even the most dovish Fed officials. It's clear that a faster taper is a means for the Fed to have flexibility to enact rate hikes sooner next year. If the Fed goes to a taper pace of $30 billion a month, double the current rate, it could be in a position to hike rates as soon as the mid-March or early May meeting. So gaming out options would need to begin soon. St. Louis Fed President Jim Bullard said Friday that he wants to get to live meetings for possible rate hikes as soon as possible. No Fed official, including Fed Chair Jay Powell, has pushed back on the market pricing for 2 rate hikes next year. Currently, the market's priced in the first hike for June and more strongly in September. A second hike is gauged likely by November. You can see that on the right side of your chart there. Public comment suggests Fed officials have not made up their minds yet about when to hike. Decisions will come meeting by meeting and be based on the economic data and, of course, the path of the virus. But it looks likely that debate's about to begin that would give the Fed flexibility to hike earlier than timing currently priced into the market, Becky.
Steve, the timing is weird on a lot of fronts. Right after they kind of made this pivot, we got that weird news on Friday. We've got the Delta with the unemployment report and the household number. And then you've also got the variant, this new Omicron variant that we just don't know a lot about yet.
Yeah. You know, I think the part of the big news last week was Fed Chair Powell saying, you know what, a new wave or a new variant is more likely to be inflationary than it is to affect demand or create weak aggregate demand. That's been the way the Fed has looked at virus waves each time. This time now, it's like he's more worried about supply and inflation. That's a big part of the pivot that's out there by the Fed.
It is, and that makes sense, too, especially watching what has happened with wages and with trying to get people back into the workplace, too. Yeah, it gives us a lot to think about on this Monday morning.
Okay, so they not only said that they're going to do it now and faster and bigger. So what's the market's going to do after all this stuff? So let's get into it. That's what we're going to talk about this morning. Why people come to watch me is this. What is the MBS doing? What's mortgage rates doing? So the biggest factor, the biggest thing that we watch would be what's going on with the MBS markets. MBS is mortgage-backed security bond that trades on Wall Street that is the biggest determinant in the mortgage rates. So don't monitor the 10-year Treasury or the 30-year Treasury or anything what the Fed's doing because it doesn't directly affect mortgage rates. What it does is mortgage-backed securities. So if you want to find out more about that, find some of my old videos and I'll try to label them or do a specific MBS video. But let's get on to the nitty-gritty of all this. I moved myself to the other side because I was blocking a lot of the data. So you see, in the last week, we condensed a lot. Why? The markets are confused. One day, if I showed you the intraday chart, all this stuff, it's dramatic. But at the end of the day, it seems like it really didn't move that much. But we can see right now, let's break it down from the beginning. What's going on right now in the MBS market? We're down 8. That's really not a big factor. Once we get to 10, 12, 15, 30, 70, those are huge moves. 8, it's not going to really affect the markets at all. So we go over here. What's the trend? Well, the trend in the last 4 or 5 trading days has been pretty steady. You know, these numbers right here, you know, they're steady. But you have to throw all the macros and the micros and a lot of the economic data out the window, other than what they're focusing now on is inflation. The Fed had 2 mandates: full employment and price stability. Part of that price stability is inflation, so they're really paying attention to inflation. I still think, let's say half of it is transitory. Wage inflation's there. Once we get the supply chain issue fixed, I think that's going to ease a lot of things once people get back to work. Now, guys, this could be another 6, 8 months, year, because mentally, I think a lot of people are still like, you know, this stuff can kill me. Then also there's people behind the scenes that have families that their kids, you know, can't go to school or whatever. So a lot of the school piece of the puzzles come out of the equation. So let's basically break down this. Sorry for rambling, but there's a lot of factors that come involved in all this stuff. So the last trading week has been pretty stable. Let's see the economic calendar for the week. There's really nothing today. So the focus today is going to be on what the Fed, how everybody's going to dissect what the Fed is saying. But again, they're going to meet in about, I think, next week or the following week. This Omicron virus is going to be the kind of the iffy thing there. You know, what is it going to do? Okay, so that's the biggest piece of this puzzle. If it dwarfs or morphs into something much bigger, they're going to have to act. Okay, so that's that. So be careful in what you read on Main Street media. So the rest of the week, we see tomorrow, there's really not that much on the agenda. Let's see, I'll tell you on Wednesday, the JOLT index is pretty interesting. For those that don't know that, that's how many job openings there is. Usually people don't focus on the openings. They just like, hey, there's so many people out of work. How many openings there are? It far exceeds the number of people looking for a job. Then on Thursday, we start getting the weekly job list claims, the initial and the continued. And then on Friday, we see a lot of inflation numbers. So really nothing until we basically get to Wednesday. Okay, so that's that. What's the intraday chart doing? It's all over the map. You can see we opened up the gate just plummeting, and then we recovered back. So I think rates will pretty much open up where they ended the other day. So let's get on to that piece of the puzzle. So where did rates open for the day? So let's get to that piece of the puzzle. And that is right here. So let's go through this agenda. Sorry, I got to put my cheaters on. I'm old. Okay, we start here. Remember, guys, this is Friday's close, Monday's open. Basically, we'll put it that way. So you can see the 30-year Treasury. I'll try to zoom this as much as I can without losing me at the bottom. Let's move me over a little bit. I'm going to move on the other side, and I'll try to blow this up a little bit. So let's get to that. The 30-year Treasury, or the 30-year fixed rate, 3.2, it is down 1 basis point. So let's monitor across this. All right, so you can see the 30-year fixed rate, 3.2. Yes, or Friday was 3.21. So that means it dropped 1.01. We reference that as 1 basis point. Then we get to the 15-year fixed, 2.56 minus 1 basis point. FHA stable at 2.88. Jumbos are down 1 basis point, 3.12. The 5-year ARM, this is, it goes like this. So I'd be very careful if you're looking at ARMs. It is up 12 basis points. So that's where we're at right there. So if you'd like to find out more about me and my team, oh, guys, those aren't my rates. Those are the national averages. To find my rates, how do you do that? And how do you find out more about me and my team? Well, go to therateupdate.com. There's a lot of features. When we move some things around just to make it more convenient for you guys, I'll move me to the other side again. You can go to therateupdate.com. Over through here is the ways you get a hold of us. The first thing you can do, well, let's go from right to left, is you can give us a call, 844-775-5626. That's probably the easiest way to get us and talk to a mortgage consultant. You can book a meeting. You click this. Let's make sure that is working. The other day I had some complaints that it was not working. So you go there and you click the day and time you have available. And we will reach out to you and say, hey, how do you want to do this? You want to do it by Zoom or by phone call? Either which way is best whatever's best for you. That's what we'll do, and we'll answer any and all the questions that you have. The next thing is how to apply online. That's as simple as it is too. You just click this top right tab that says apply today. It'll launch you right to our online application system. Pretty darn simple. You can get through this in about 5-10 minutes. Be as thorough as you can, because it's like a computer. Junk in, junk out. So that's it for this morning's update on mortgage rates. I hope you like what you see. We'll be back later today to discuss more about what's going on with the Fed and some other things in the news today. So I look forward to seeing you later this afternoon. God bless, guys. Have a great day. I'll see you soon. Bye.